Hi everyone, my name is Justin Munt with Munt & Associates here in St. Charles, Minnesota. Today we're going to be talking a little bit about pensions. There have been a lot of questions that have come up recently from clients that are considering their options when it comes to their pension and retirement. So we're going to talk a little bit about whether or not a lump sum makes sense or taking a payment option from your pension. So let's move over here to an example. Today we've got a lot of clients that are deciding what they should do, and they're starting to see what their options might be for taking a payment from their pension. They can, in this example, take a $550,000 lump sum payment from their pension, or they can choose from several different options when it comes to starting a monthly income stream. The top option is usually the highest payment. That's taking a life-only payment that just pays the client for as long as they live. It doesn't take into account if their spouse might live longer than them. It ends at their death. And so in this example, a $2,490 payment. There are other options. There's a life-only with a 5-year term certain payment. That means that if the client passed away in the first 5 years, that $2,458 per month payment would continue for 5 years. Same thing with a 10-year certain, that would continue for 10 years. 15-year term certain, it pays for 15 years no matter how long the client lives. If they pass away within the first 15 years, it would continue for 15 years. They also have options that continue to pay a survivor. So if the client passes away early, but the spouse is still alive, it will continue to pay through the spouse's life at a 50% amount, 75% amount, or even 100% joint and survivor amount. This one's pretty common. It's a pretty common choice for clients because they want their survivor to continue to get the payment that they were receiving even if they pass away. So in this situation, this client could take a $550,000 lump sum payment, or they could take a $2,039 per month and have that continue for both their life and also their survivor's life, right? So what do you pick, right? Well, we might have an alternative that you can consider that might look better than these payment options. So we could potentially lump sum your payment into one of the two areas. Now, we could lump sum that $550,000 into an IRA, and we could continue to invest it if you don't need income right away. And you could access those funds later on once you start to need income further on into your retirement. But some clients want to start that income payment right away. And so we might suggest putting it into a SPIA, or a single premium immediate annuity. Single premium immediate annuities are contracts with insurance carriers, and they guarantee income payments much like your pension would guarantee an income payment. But there are some benefits. You can turn on income now with a SPIA, and normally you'll see a higher payment every month out of a SPIA than you might see coming from your pension. In this situation, with 100% joint and survivor payment, which matches with this one down here, where both the client and their survivor would continue payments for both of their lives, the payment's $2,647 versus the $2,039 down here. But the main benefit I think that's really important to consider is the cash refund that the insurance carrier provides. If the client and their survivor pass away early before using up this money, the balance goes to whom they list as a beneficiary, right? You might list your kids. They would receive what's left that hasn't been used up yet if you don't live as long as life expectancy. So there's a huge benefit to potentially considering a SPIA versus over here, if you pass away early, the extra money that didn't get used just gets absorbed back into the pension fund for other clients that are using the pension to spend. So it might make some sense to consider a SPIA. And if you have more questions or you'd like to talk through your situation, just contact us. You can reach us at 507-932-8950, and we'll be looking forward to helping you. Thanks.